Good morning, good morning, good morning. Today is 20th of May 2025, and we're going to go over my commentary for the dollar and foreign currency. So, if you are joining me on this live, I'd like you to type in the comment section. Let me know your name and where you're watching me from. Okay. Type your name and where you're watching me from, and you can also let me know the pairs that you're looking at today, being 20th of March 2025. Today is uh, is Tuesday, so we're probably looking at the weekly market profile. Someone is asking me to please help with my community group link. Please, you can check the description of all the videos. I have a link for my Telegram community. If that is what you're asking, just check the link on the description of the video. You should check the link. You have access to my, Telegram community. But if you are looking for private mentorship, then also check the link and send me a DM for private mentorship. Okay? All right. So, like I said, you can type in the comment section and let me know the pairs that you're looking at today, so that we can go over it. We can go over the pairs you're looking at, the currency pairs that you're looking at today. Okay. I remember last week, was it on Friday? I did an analysis here, and it amazed me when I looked at the chart yesterday and saw how price literally played to script. If you haven't watched that commentary, I think you should watch the commentary here on Friday. You should watch why price traded into that level. We literally called this price action from this level. Price traded. I think it was a live session we had, and I gave the buy signal right here, and price traded right to the draw liquidity there. Okay, so today we're starting with looking at the economic calendar for the week today, being 20th of May, sorry. And what we can see here is we have CPI coming on Canadian pairs. So most likely, if you are trading the Canadian dollar or the JPY, you should be very careful, because there's going to be CPI today around the 1:30 p.m. And we also have zero higher medium impact news on the dollar and dollar associated currency. So we may have a very slow day as well on the dollar and dollar associated currencies, foreign currency and the likes. Okay, on Wednesday, tomorrow, we have CPI on GBP. That means the GBP pairs are going to experience a high impact around 7 a.m. Then Thursday, we have high impact on euro, high impact on GBP, high impact on the dollar. So Thursday is going to be highly volatile, and as well Friday we only have medium impact on the dollar. So it's just going to be a very straight week. There is no major CPI on the dollar. There is no, because the dollar is the main driver. The dollar is the benchmark asset. I'm sure you know that. You must have heard me say that quite a lot of times. So today we're going to be looking at the dollar index, and as usual, we'd like to look at the higher time frame first, and I'd like to look at the daily time frame once again. Remember that we've been shorting the dollar because the dollar is bearish from the monthly time frame. If you take a look at it, sorry guys, I don't know why my dog is shouting. All right, we've been bearish on the monthly time frame, and we're seeing how the dollar is reacting off that previous fair value gap there. Previous support turn resistance is reacting off that level. Then on the weekly time frame, we've seen the dollar mitigate that inefficiency, that fair value gap there. And for me, I see this guy attacking the next round liquidity, that sell side liquidity pool there, and also the relative equal lows by the left there. On the daily time frame, where we actually see the dollar, trading to a premium institutional reference point. When you use your Fibonacci to measure between the high to the low, we are above 50%, and we traded into the bearish order block, or you can call it the mitigation block there, and rebalance that liquidity void. And look at what price action has done. Price action has created a swing high, which is a reversal pattern, has even created a bearish order block right here. And right now we're bearish on the dollar, and I see the dollar trading below the relative, the low resistance liquidity run right there. So on the 1 hour time frame, last week we've seen the dollar created cracking correlation right here between the dollar, the GBP, and the Euro USD, created that displacement and created that expansion lower, traded into internal range. Remember, for every new expansion, we said price would retrace into internal range inefficiency, and internal range inefficiencies are majorly fair value gaps and or other blocks. Okay, the fair value gaps and or the other blocks, these are the major internal range inefficiencies that you should be paying attention to. So price traded into that fair value. And I remember clearly saying that when you see tiny fair value gaps within an internal range, institutions are deliberate about them and would use them as a price point, as a key level for a retracement. And look at the precision in it on Friday was that we saw the dollar create a shift in market structure bullish right here after taking out that relative lows there, created shift in structure, bullish breaker. Right at the breaker, we took a buy into that drawn liquidity. Okay, we took a buy into the drawn liquidity, that fair value gap there. And at the time we're buying the dollar here, we sold the euro, we sold the GBP USD, and it was a swift movement into that area. Then on the Sunday opening, look at that gap open, price created. It tells you the momentum. All right, a weekly gap open lower tells you that you will most likely have a bearish week. A weekly gap open higher tells you that you will most likely have a bullish week. So we've seen that displacement lower, and look at what price has done. Price has created that displacement to the downside, and right now I'm even seeing more sell signatures because look at the displacement we've had, and price tapped into that drawn liquidity, the internal range inefficiency, and look at even what we're seeing here. Amazing price delivery. Price has taken out that structural high, right? So this is more like a grab on liquidity and has traded into that breaker because we took out the high, shift of structure bearish, tapped into that area, and what do we see? Price has created another shift in market structure bearish just right here. Okay, so we like to short the dollar as the dollar trades back into that bearish, into the bearish breaker. We like to go short. Okay, so we've seen this price action, price taking out the high, create shift in market structure bearish is a very good pattern for me, and we would like to sell when price returns into the breaker. I'm sure my guys understand what to do here. once price returns into the breaker, for me, I'm going to be shorting the dollar alongside other confluences I'm looking at. I'm going to go short on the dollar while I buy other foreign currency. The Euro USD, GBP USD, it's going to be a buy for me while I'm shorting the dollar alongside other confluences. Okay, and we're going to short into drawn liquidity, the relative low, that low there, the low resistance lows there, and as well the old low on the weekly time frame, and those equal lows we outlined on the daily time frame. These are the things I'll be looking for on the dollar. And clearly it looks like we even have a smart money divergence. I think that's what I just scouted for right now. Smart money divergence, because let me show you something. Almost every single week, price action will create a smart money divergence at the high or the low of the week, or in between the trading days. You can see the dollar index here created a higher high. Price took out that previous high there, traded into the bearish breaker, created shift in market structure. Bearish at the point price was forming that higher high, we should see Euro USD create a lower low, which of course the Euro USD obeyed, created that lower low there. Okay, I'm not using FXCM, I'm using forex.com. So price created that lower low there at the time the dollar was creating that higher high. So it was a good price delivery for us, and price traded into the bullish breaker right there. You see that here. At the same time, we see we see the GBPUSD failing to create that lower low right here. So that is a cracking correlation. All right, euro dollar created a lower low there. DXY created a higher high right here, but the GBPUSD created a cracking correlation. So this is a smart money fingerprint that lets you know that smart money is involved in this type of price action. So if I'm going to be buying, I'm going to be looking for the dollar to trade up into that bearish breaker and the bearish order block there. And also look at what we're seeing there. We're seeing a fair value gap there. That fair value gap that price just created, right now it's a new candle opening on the 1 hour time frame. I would like to see this guy trade into that fair value gap, then I can short from the fair value gap, but of course my stop loss is going to be above that height there. So if I'm shorting the dollar, I'm going to be shorting the dollar somewhere at the fair value there, and my stop loss is going to be like this. So as I'm shorting the dollar here, I'm going to be executing a buy on the euro dollar. All right, so that will mean the euro dollar trading also into that fair value gap there. There's a fair value there on the 1 hour. All right, so once it taps into that fair value gap, I'm going to be buying that, and also the GBP as it trades into the bullish order block, or I'm looking at this guy trading into that rejection block here. I'm going to be buying the GBP USD. Okay, so this is what I'm looking at today on the dollar, on GBP USD and Euro USD. Okay, my friends, on Euro USD. Then I think we should take a look at gold, because of some of you who usually trade gold. So gold also, it's gonna be, let's take a look at gold and see what gold is most likely gonna do. So for me, gold, I'm looking at the weekly time frame, and this guy is still bearish because look at the weekly time frame. We just created a bearish order block, not just a bearish order block. We also created a failure swing right here, failed swing, and shifting market structure bearish. Okay, right on the weekly time frame. And we created that bearish order block, so I would like to see this guy attack that old low there, the sell side liquidity pool right there, before this guy seeks to buy more. Then if you take a look at the daily time frame, you would see clearly that although this guy, it's very tricky because we still have a fair value gap above that level there on the daily time frame that has been untapped. So I would like to first wait to see this guy trade into that fair value gap. Then I'm going to be looking to short into that drawn liquidity, that old low with the fair value gap below it. Okay, if that doesn't happen, I'm not going to be doing anything yet. I'm not going to be doing anything yet. All right. I'm skeptical about this because if you look at the monthly time frame, this guy is bullish. All right, this guy is bullish on the monthly time frame, especially because we just rebalanced that inefficiency there. On the weekly time frame, so this bearish order block is the only challenge I'm having, because this guy is a very significant institutional reference point and it looks very clear that it's a bearish order block. Okay, the internal range, remember I said internal range inefficiencies are majorly fair value gaps and order blocks, fair value gaps and other blocks. So, and look at price action, we acted off that bullish order block right below. Okay, that bullish order block. Sorry guys, give me a second. So we reacted off that bullish order block, which is significant for me right there. And if you take a look at the daily time frame, clearly this is a bullish market structure. We just traded into that bullish breaker, price took at the low, the breaker, the fair value gap. So our only challenge is that failure swing, which is signifying a reduced momentum for that buy pressure. Okay, so that's exactly the only challenge you're going to be having now. Okay, but price traded into that bullish breaker and also created a swing high, 3-candle price action, the middle candle having the lowest low, and we're yet to take out the high of the third candle. Should that happen, it's going to confirm that we are bullish. Okay. And then last Friday, look at what we've had. Price action, creating shifting market structure, bullish right here. After trading into the bullish breaker, we create a shift of market structure, bullish, traded back into that discount internal range. Remember, for every external range, price will retrace into internal range inefficiency. Other blocks and fair value gap, we traded back into that IOFED, fair value gap with an old high in between. A lot of you are not going to be able to see that. Fair value with an old high in between. Price traded into that area. Look at the swift reaction again. You see that? So right now, price is taking out that low. And let's see if it trades into that fair value gap. Okay, I would like to be a buyer. Should gold trade into that fair value gap? I would like to be a buyer of gold. I would like to buy gold because of the relative equal highs above, that inefficiency, that old high, and all of that. So I'm bullish on gold, not bearish. I'm not going to be selling gold. I'm only going to be bullish on gold. So this is exactly my perspective for the dollar, foreign currency, and as well the gold commodity. For the dollar, foreign currency, and as well the gold commodity. Okay guys, so if you have any question, you should drop them in the comment section. Let me get to see your questions. If you have any concern you would like me to address, let me see them in the comment section. And of course, I always recommend you to get to join my one-on-one mentorship program. If you're looking to scale up your trading, you can't always get everything in a live session on YouTube or through the YouTube videos. There are many things to learn that you don't know yet. Okay, so, and if you're willing to pay the price for the ignorance that you have and for the results that you're looking to achieve, check the link on the description of the video. Send me a DM. Let's get you signed up, get to join myself and my team for the next big thing that's about to happen to you. All right, so I think we've done justice today. In the absence of anything, I'd like to wish all of you a happy new week, happy new trading week, and I really hope that you make money this week while trading. All right, regardless of whatever signals you get or whatever direction you get from me, always use standard risk management on your trading. Only risk money you can afford to lose, and don't be overconfident. Be humble. Don't be overconfident, lest the market humbles you itself. Until next time, I wish you good luck, good trading. Stay safe.